elaborate on that a little bit, right? It's almost like kind of the Amazon approach of, hey, let's deliver as much back to the user or customer as possible, and then they'll stay with us for a long period of time. Obviously, a lot of your competitors are charging higher fees and kind of extracting more value. Why did you choose to go with the low fee model? And then kind of how has that thought process changed over time?
Sure. I think there's a number of factors. There's the mentality factor of the different founders. How much do they believe in this industry, whether they're short-term or long-term? And then there's the skill that we already have or people already have. So to be honest, when we first start, the goal is just to survive, right? So just to get to cash flow break even and be able to survive. And potentially, if we're not there quite yet, then we may even want to raise some money from some investors that they take a little bit of the risk and then also gets rewarded later on. So initially, it's that kind of thought process. And once you're over that hurdle, it's like, well, now the mentality really comes into play. It's quite, to be honest, once you have like a reasonable exchange running, you have like decent number of users, etc. It's not that hard to make some money. I mean, you will be able to make some money. But then as most platforms or most businesses, the more you charge, the slower you grow. And the more you charge, you may even like actually have a short-term business. The uncertainty in this industry also causes people to be more short-sighted. For example, if you establish an exchange in a country and the regulations change every 3 months, then you are kind of forced to be more short-sighted and just sort of look, let's make as much money as we can as quickly as possible, and then when things change, we'll just pack up and leave, and we would have made our money, or at least recovered our investments. But I think I've been in the industry for a long time, even before Binance. So I have a much longer term play. I believe crypto will be the super future. Like if you look at 10, 20, 50 years, 100 years from now. So I have a much longer vision on this. And luckily, we got over the bump for the sort of survival mode very quickly, like within a few months. And it was also within those first few months, like even with the first quarter after we launched the platform, we seen like some of the regulations change in China that impacted us quite severely. But actually afterwards, looking back, it was actually a very positive influence. It actually drove a lot of users to us. But at the time, it was like quite tricky. So we gone through the initial sort of phases very quickly. And right now we have a platform that has scale, and we have the brand. And I think right now I have a much longer term sort of play. I just want to be able to service users for the next 20, 50, 100 years, hopefully. So yeah, so for us, it's really not about making all the money right now. So businesses very often have to decide between short-term profits versus long-term gains. For us, everything's long-term. So this is why we're still investing in large deals in this environment. It's not about the next 3 months. It's not about the next year. It's about like more than that. So and also we're not a publicly listed company, so we don't have this sort of Wall Street analyst calls, etc. We do have a token, but the token's getting more and more decentralized, and the token's doing fine. But so I think. So I think basically we have just the mentality aspect of it is really important. So for this reason, we really want to protect our users. So we view our users much more than our short-term revenue. So we do make money. We make money very transparently. People trade and they pay commission fee. So that's pretty much it, really. Yeah.
Yeah. You mentioned a public company. Any interest in ever going public, or do you enjoy being a private company without all of the short-term pressures?
Yeah. So I don't think we're going public anytime soon. We're not preparing for it. We're not prepared for it. So we're kind of running the company in a direction that's not really fit for IPO. So a lot of the decisions we make sort of very fundamentally shapes of the organization. I don't even use the word company that often. So it's kind of hard to IPO that kind of the IPO role doesn't really fit our type of organization, which is very decentralized. And I also don't believe in the IPO game. I think that game's really way old. The system's really broken. Basically, the entrepreneurs are no longer, number one, the entrepreneurs are no longer making the money. They basically have to yield to VCs very early on to be able to grow a large platform, because to grow a platform, you do need heavy investments. And typically entrepreneurs have the skills, may or may not have the skills, but they don't have the money. And when the institutional investors come in, when the VCs come in, they want returns. They like, to be honest, very few VCs care about the vision. Most guys who care about the vision will be building stuff themselves. There's very few that do care about the visions. I don't want to offend everybody, but mostly VCs have a fund that have a fixed term, either it's 5 years or 8 years or 10 years, and they need to show returns. They need to raise the next fund, etc. And they naturally want to have pressure to sort of cash out, and then they want the firms to IPO. And then when the firms IPO, the VCs, the CEOs are typically giving a mandate to get the price to a certain point, and they usually have a deal. And then the CEOs get a bonus when they get to that point. The VCs cash out at that point, and then the retail investors get left holding the bag. And hopefully, if the company does well in the future, great. But there's a lot of risks there. But everybody knows how to play that game. So this is why the CEOs gets a lot of money. This is why the VCs structure the deals that way. I don't think it's super beneficial. I think there's a better structure that can be achieved. We have a lot more freedom. Luckily we are cash flow positive, and we can dictate our own growth at the rate we grow. We can fund relatively new ideas. Sometimes some really wild ideas. So we're kind of operating as a startup, but also as an investment arm, and we have a lot of experiments going on. So we have a lot of freedom to try this kind of stuff, and we have a very united team. So we don't have a board telling us what to do, etc. So I think, yeah, I don't see any need to IPO. And also, given the regulatory uncertainty in many jurisdictions, it's still unclear to see how a cryptocurrency exchange is going to IPO. So we prefer to probably let somebody else do that first, and we don't need to be the first one there.
Yeah, that brings up BNB, which I think there's a lot of folks, I think Multicoin, a bunch of these people have kind of written these long analysis on the idea that BNB, if you don't go the IPO route, can serve as a way to really drive kind of shareholder value. But in this unique kind of new model, maybe talk a little bit about where BNB is today, and then kind of how you see that evolving over time.
Sure. I think we structure BNB as very much a utility token. So it does not represent security in Binance or any of the Binance affiliated entities. It's a freely traded coin that we used an ICO back in 2017 to raise some funds to bootstrap the platform. And then from there, I think today it's grown about 130x from in the last 2 years. At the peak, it's grown about 400x, but there's fluctuations. And there's this common discussion between what's the difference between shares and the token. So now that's a pretty interesting dynamic. So I think the shares and tokens could be separate, but especially if you want to, if you can say, look, the tokens are used in our ecosystem. Let's not use Binance. Let's use, like, say, a gaming company, right? So you issue a token, people can use it to pay for, I don't know, game virtual merchandise like weapons and stuff like that. So then they can use that in the game. And then you have the company shares that you can sort of, the company shares are worth however much. You can look at the income, profits, etc. of the company and determine the price of that. Whereas we have chosen not to, or at least for now, we're not to sort of monetize the shares aspects of Binance. So right now, we don't see a need for it right now, and a lot of companies stay private. Even like if you look at Bloomberg's company is still private. It's a valuable company, but Bloomberg makes money from profits, so he didn't really sell a lot of shares to make money. So I think right now our focus really and I think right now if we say we issue like Binance shares and raise a lot of money and continue to do that, you actually dilute some of the value in the BNB ecosystem. So we actually just want to say, look. We continue to push BNB to be used in more in our ecosystem and also in our partners' ecosystems, and that's what we're going to be focused on. And we're not going to so I'm at least right now I'm not really thinking about monetizing the shares at all. Actually, I have an idea which I don't talk to people often about. I eventually want to make Binance a real DAO. Like a real decentralized autonomous operation. And if we do that, then one of the things we will have to do is we will likely have to forego the valuable shares. So
okay, so you got to explain this a little bit, because this is, I think, kind of the extreme end of the non-IPO path, which is you essentially decentralize the entire thing, and you being the founder, it's a big financial decision, because you basically would say the equity in what I've built is going to be worth zero. You're not going to have the payday from the equity, and you now have this DAO. But if you have the cash flow, there's obviously value there. Maybe talk through exactly like what would that world look like, and then what would that mean for you and the rest of the team?
Sure. I actually don't know what that world would look like, to be honest. This is new territory, right? So we're kind of experimenting ourselves. And so we're kind of on a virgin territory. We just landed on this land, and we're still exploring. We can see there's a forest, but we don't know what's in the forest. We can see there's a hill. We don't know what's behind it, kind of thing. So in my mind, we're kind of in that territory in terms of organizational structure, etc. We do have team members who have ESOPs. We still do have a couple external shareholders. This aspect is it is an interesting topic to sort of explore and discuss. But I do think a company who has an organization who have very strong cash flow are able to take care of their employees, shareholders, etc. So there are different ways to monetize, and this is why it ties into the long-term play that we have. I mean, you can sell your shares, and basically the shares encompass future value, right? So the value of the shares of a company encompass how much money can be made later on. Whereas if you just do a dividend or a profit split to people, then it's just how much money you've earned so far. But if you take a longer version, say, look, there are many companies who does not go IPO. There are many founders who again, taking Bloomberg for example, like the guy's really rich, and I think he still owns 70% of the shares of the company, and they never really sold anything else. Merrill Lynch was one of the investors, probably still is. Well, they probably changed hands because Merrill may have had its own financial issues. So in that aspect, I think there's I think as long as you get investors and you get team members who are into the same vision, who are here for the long-term play, then that's less of a problem. We actually looked at a new idea which I think we invented actually. I named it, and so I named it, and then our team kind of is still polishing it. We call ETOP. So instead of employee stock option, we call it employee token options. We actually don't like the word employee. We call them team members, but that'll be TTOP. It's kind of cheesy. But overall, though, we want to say, look, of our profits, we can distribute some to in tokens to our team members, and the tokens are interesting because the tokens value fluctuates with how well the ecosystem's doing, and then this way the team members are incentivized to sort of grow the ecosystem, not just the corporate value, not just the enterprise value, but more of the sort of ecosystem value. And I think that's actually more aligned with what we want to achieve right now. We want to build out the ecosystem. We want to decentralize sort of the enterprise aspect of it. Even though right now, I think Binance.com, especially the trading platforms, is a large revenue generator. But things could change. Like we have a DEX, it's not super big right now. But things could change in 3 years, 5 years. We are experimenting with that, and I think it's super fascinating. And but if you ask me, like, look, what's the blueprint? Is it 100% going to go this way? I don't really know, to be honest, because it's all virgin territory. We're experimenting, and we may make some mistakes, and we have to readjust. But we are exploring with the team together. So and I think whatever we find out that works, we will be very happy to share with the community. And hopefully other organizations will be able to follow. Binance is unique. Yeah, Binance is unique in this way. We actually started as more centralized organization. We kind of push in this way, whereas other like projects like Ethereum, they did start much more decentralized. So it's a bit different. Yeah.